traders, my name is Gregor and welcome for my trading office. In today's video I want to talk about Euro Aussie. If you are our member, then you know that we have been shorting Euro Aussie from a few weeks back, and I really want to look at this trade from an educational point of view, because I know that it can be very useful, especially if you trade in the direction of a trend and want to wait on a pullbacks. So actually what I have been looking for, let's take a look on the Euro Aussie weekly chart first. As you know, market made a very nice 5 waves up here, and what was very important is that this five wave movement has been finished by a spike here at the start of the year. So back then I said that okay, probably we are going lower with at least big 3 waves of decline. And as you can see, this was the first leg, then a pullback, and looks like the third leg is still missing. So in my trading, I definitely want to look and want to trade within a direction of an impulse. So if the first leg was very strong and impulsive, then I want to trade within this direction. But of course, after this pullback, the middle leg is finished. So if we look at the Euro Aussie daily time frame, you can see that this is that spike and a reversal from the highs, and then market somehow went into a new low, but only for a temporary move. Okay, normally that occurs in wave B position of a flat. In a lot of cases, when you have a flat, wave B will be at a new high or a new low if you're tracking a big downtrend for just a temporary limited time there. Okay, so I think that the following move from that low was just a very tricky but still very strong and sharp wave C, but it can be part of a flat correction. Okay, so what I was looking for is actually I was observing some, when prices were trading higher into that wave C, I was observing very important fib levels. As you know, wave C in deep correction will retrace for 78.6 or maybe 61.8% compared to the previous decline. And back then I was observing this area very closely. However, I'm not that kind of a trader who would love to go aggressively into the market at very important levels. What I want to see from a market is a reversal from those levels, because I want that market confirms that this support or this resistance is really very important, is really doing its job. Okay, so I want to see firstly for market to react from that zone before I may look for any potential trade. And what actually happened from here, as you can see, market made a very nice move to the downside. So when we were trading here, okay, I said that okay, we need to look for shorts on a pullback because market reversed from where we expected it to reverse. So it looks like that we are on the right side of the trend of the wave count, and we of course want to take advantage of this. So what we've done is actually we scaled down to the lower time frame charts and we just waited on a corrective rallies, and this corrective rally was actually wave 4. In fact, I have here this, we look on our website here, this is the Euro Aussie, and actually that's a setup chart. Okay, so back then what I have been looking for, as I said, we identified potential top zone here because market declined, so I wanted to look for shorts on a pullback. So I identified this wave 4 when it was unfolding. Okay, I said that probably this is wave 4. Why? Because notice that these 5 waves of decline was very strong, and normally when you have a very strong and an extended 5 wave decline, it typically represents wave 3. So I wanted to take advantage of this and to wait on a pullback to look for shorts. But before I go short on a pullback on a wave 4, I want to see which level we should observe, we should keep an eye on for potential limited upside of this bounce in a wave 4. What is very important for a wave 4 is that when you have deep wave 2 like here, it can be very similar wave 4 as well. So I took a distance of a wave 2 projected from end of a wave 4, and I came out with a very nice level here around 161, 80, 70, around there. Okay, so this was my first resistance. The next very important application is the FIP application to recognize where wave 4 could stop. And what is important is the 38.2%. Of course, price can retrace even 50%, but 38.2% is probably the most important, and can be even more significant if it comes in at the same level like where wave 4 was equal to wave 2. So you can see it was the same zone here. 38.2% came in at the same level where wave 4 was equal in distance compared to wave 2. So we had already two very nice technical potential resistance levels. And the next important level was this swing low, which actually was broken and it became resistance right there. But when you're tracking wave 4 corrective bounce, you would expect that this wave 4 will retrace back to the termination point or area of a fourth wave of one lesser degree. So actually this termination point of one lesser degree was up there, okay? But I was quite confident that this lower resistance will be much more important than the higher one. Why? Because notice that in these subwaves of that decline, of that 5-wave movement, we had an extended, or I should say just very strong fifth wave. This is quite untypical that you see fifth wave much stronger than third wave, okay? But when this happens, especially when wave 5 is longer or maybe equal to wave 3, and when wave 1 is not extended, in such case you may see a reversal of a fourth wave of an upcoming pullback only to the starting point of that wave 4 and not to the ending point of wave 4. If this fifth wave would be normal in length, which means shorter, much shorter compared to the wave 3, then I would expect a pullback to see back to these prices, to 1.6 to 60, around there. But because this fifth wave was very strong, I was also looking at this level. And if I consider that we have this wave 4 compared to wave 2 at this zone, and that we have 38.2% at this area as well, I said that this is probably the most important level, potential resistance, where we should look for a reversal to the downside. And actually what happened later is, as you know, is EURAUD moved very nicely to the downside, and as soon as we have seen a very strong break below this channel support or trendline support, if you want, we of course aggressively pulled stops lower, and because we also touched these lows here, I covered 50% of the position. But what I like to do when I'm trading, I don't want to focus on a particular price target, okay? I will not say I will put limit at this price. I just have some mental objection or mental target zone where I think that price could travel to, but not necessarily that market will stop there, because market can always surprise. There's always possibility that fifth wave will become an extended fifth wave, okay? So you always have to leave some chances for market maybe to surprise and maybe reward you even more. So what actually I done is that I just pulled stops lower and I covered 50% and just left the rest to the market. What will happen will happen. And a few days later or a few sessions later, market made even lower prices. It fell very nicely below this old low, okay, and then reversed. And as soon as I saw this reversal back into this zone, I assumed that actually fourth wave will stop here. Why? Because it acted, this zone acted as a resistance. So I said that probably we have room for even lower prices. So we pulled stops a little bit lower still and left the rest to work in maybe in our direction. So a few days later, we have seen, as you can see, this wave 4 stop there at that resistance. We have seen a decline to a new low, and then actually market bounced and we again pulled stops even more lower, because fifth wave potentially had already ended here, and a few days later, as I know, market actually turned to the upside. Okay, so Euro Aussie is having some very interesting development, and what is probably the most important of this trade is that, at least for me, is that you patiently wait on market to reverse from, on a higher time frame charts, from the your potential resistance levels based on FIPS, based on trend lines, whatever. And when this happens, you scale to the smaller time frames and look for potential entry opportunities there, because you will have much better risk reward setups. And of course, the next thing what is important, at least for my trading, is that you always try to leave your targets open, because you never know how far market will go. Okay, because as I said already earlier, reward can be much better if maybe something surprisingly will occur on the market, and maybe legs will get extended. Okay, so traders, if you like this video, if you like this kind of thinking about the markets, then check our services at ew-forecast.com, check our trial, and try to ride those waves with me, or just check our wave counts. If maybe our wave counts or our prediction agrees with you, then this could be even better advantage maybe in your trading. Okay, so traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.